You are watching Daily Market Pulse. Today is Thursday, April 16th, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. AI is about to wipe out coding jobs while a food crisis threatens global markets, and Bitcoin faces a necessity-driven inflection point. Here is the framework for today's briefing. AI labor displacement, how coding jobs disappeared overnight. Supply chain crisis, food shortages and currency collapse warnings. Dollar system breakdown, petrodollar ending, gold returning. Tech bubble warning, 2000-style crash signals emerging. Bitcoin necessity test, from speculation to survival tool. Daily financial market update, live prices, gold, silver, crypto, equities, U.S. bonds, and trend. Let's start with the most immediate disruption. Artificial intelligence is rewriting the rules of employment. AI agents are enabling non-technical individuals to build complex applications without traditional coding skills, with family members of content creators successfully developing functional tools through AI assistance. This represents an immediate threat to computer science education and traditional software development careers, with the transition expected to fundamentally alter the tech landscape within 24 to 36 months. Indirectly bullish for Bitcoin and crypto infrastructure, as these become critical settlement layers for the expanding AI economy, though specific market moves remain limited. What to watch next? University computer science enrollment trends, tech company hiring patterns, and the emergence of AI-first development platforms replacing traditional coding bootcamps. Now let's examine the supply-side shock that could dwarf the AI disruption. Geopolitical instability in the Middle East is threatening critical supply chains for oil and fertilizer, while Russia lacks the capacity to compensate for potential supply gaps. The convergence of energy and food supply disruptions could trigger a fundamental economic crisis, forcing governments to prioritize tangible asset stockpiling over financial engineering. High volatility expected with initial flight to safety. Bitcoin may suffer from liquidity crunches initially, but could serve as a hedge against fiat devaluation if dollar confidence erodes. What to watch next? Middle East conflict escalation, fertilizer market pricing, Russian production capacity reports, and government strategic reserve policies. This connects directly to the breakdown of the monetary system that's been in place since 1973. The 1973 Petrodollar agreement is collapsing as China actively develops physical gold markets to replace the dollar as the global reserve currency, while critical resource shortages emerge in helium and natural gas. This represents a fundamental shift from the fiat monetary system to commodity-backed standards, requiring economic discipline and resource-based international cooperation. Gold positioned as essential for economic discipline, increased volatility expected during the transition period as markets price in post-fiat monetary systems. What to watch next? Chinese gold market development, central bank gold purchases, natural gas pricing, and geopolitical cooperation agreements between major powers. While structural changes accelerate, market valuations are detaching from reality. The recent market rally shows characteristics of the 2000 tech bubble, with valuations detached from fundamentals and companies shifting from cash-rich balance sheets to highly leveraged structures funding AI expenditures. Speculative excess in both traditional markets and crypto suggests a correction that could trigger defensive rotation into energy, gold, and short-duration assets. Crypto, characterized as retail gambling rather than disciplined investment, recommendation for defensive positioning in hard assets and avoiding long-duration bonds. What to watch next? Tech company leverage ratios, retail trading volume in speculative assets, and energy sector relative performance versus tech giants. Finally, let's examine how Bitcoin fits into this changing landscape. Bitcoin faces short-term volatility from liquidity crunches and retail speculation, but the medium-term thesis strengthens as a hedge against banking failure and fiat devaluation. Bitcoin's value proposition shifts from speculative asset to necessity-driven tool for financial sovereignty when individuals face capital controls or banking instability. Current market apathy reflects lack of perceived urgency, But this changes rapidly when real-world crises force realization of Bitcoin's utility as a non-banking wealth store. What to watch next? Banking sector stress indicators, capital control implementations, and correlations between crypto volatility and energy market disruptions. Now let us turn to today's live market snapshot, where gold, crypto, stocks, and bonds are actually trading right now. Now for our daily financial market update. Here is where the key asset classes stand as of Thursday, April 16, 2026. Gold is trading at $4,038.30, higher on the day, and is higher over the past 5 sessions. Silver is at $79.60, strongly higher today, with a 5-day trend of plus 5.4%. In crypto, Bitcoin is at $74,553, strongly higher on the session and strongly higher over the past week. Ethereum is at $2,335, strongly higher today. Other major crypto, Solana at $85.07, BNB at $620.96, XRP at $1486. On equities, the S&P 500 at 722.95, strongly higher. The Nasdaq at 2416.02, strongly higher. The Dow at 48.463.72, higher. Internationally, the DAX at 2430, higher. The Nikkei at 59,518.34, strongly higher. The FTSE at 10,633.46, slightly higher. On the bond side, the 10-year U.S. Treasury yield is at 4.28%, slightly lower on the session, and the 30-year yield is at 4.89%, slightly lower. Yields remain in focus as the market watches for Federal Reserve signals. Rounding out the macro picture, WTI crude at 88.40 per barrel, sharply lower. The dollar index at 98.17, slightly lower. The overall tone is risk-on. Equities and crypto are both bid, suggesting investors are positioned for continued upside in the near term. So what's the bottom line from today's analysis? We're witnessing 3 converging macro forces that could define the next economic cycle. AI is accelerating labor displacement faster than institutions can adapt. Geopolitical supply shocks threaten food security and currency stability. And Bitcoin is transitioning from speculation to necessity as traditional systems face pressure. The market is pricing in temporary optimism, but the structural warnings are getting louder. Thank you for your attention, and we will see you again tomorrow.